Hello and welcome to Charts and Markets on Monday the 9th of May. Now, of course, today is the beginning of a new week, and ultimately, if we're looking in terms of the economic calendar, it is very light on the ground. There's not really too many major events to be looking out for, and therefore, really, we're going to be looking at what's happened in the past. We're going to look at what's happened in terms of last week and also in terms of over the weekend. So, of course, the big release last week, being the first week of the month, was the US jobs report. We did see it very weak in terms of what we thought. We thought we were going to get something near enough 200,000 jobs. And should we see that, then this whole June meeting and the idea that we might get a rate hike in June would have been on the cards. But that didn't happen. We saw 160k in terms of the headline NFP number. We saw unemployment remain. We saw participation rate fall. And we saw the one brief bit of respite is the fact that on a year-on-year basis, we saw average earnings rise to 2.5% from 2.3%. Nevertheless, all in all, a pretty poor sort of report. But if you did look at the markets, we actually saw some of the major indices rally. That makes sense because of the fact that we're looking to see further easing, I guess, not necessarily easing, but a more accommodative monetary environment going forward and not necessarily tightening in the June meeting. But we also saw upside in terms of the US dollar, and that's coming off the back of a 15-month low for the US dollar index. That's something we're going to be looking at today. And if we do see a continuation of this dollar strength, then it's likely to really have a big impact on some of the other FX pairs. Over the weekend, we did see Chinese trade balance figures come out, and it was a big deterioration. We saw both imports and exports falling into negative territory. The key one here was imports. Now, imports fell over 10%, and ultimately, when you're looking at the sort of knock-on effect this is going to have on some of these major economies, you're likes of Japan and Australia and US, big trade partners, and they do rely on the Chinese forward demand. In terms of exports, that falling into negative territory, of course, is a bad thing, and that really points to the fact that actually, whilst it did look like we were actually sort of bottoming out and going to move into some sort of recovery phase, that's not happening quite yet. Another piece of news over the weekend came out of Saudi, where we did see their oil minister replaced. Saudi's Ali Al-Naimi being replaced by Khalid Al-Falih. Now, ultimately, I don't think this makes too much of a difference, but people don't necessarily know what he's going to come in with. People don't know if he's going to come in with a different view, but you have to understand this isn't an appointment of the similar ilk that you get within a company or a normal government. You know, this role is essentially being a frontman for the prince's views, and ultimately, I don't think you're going to see any major change. The one big thing that's driving oil prices higher at the moment is this wildfire over in Canada that is cutting output by a fifth. This threatens around about 40% of the production in Canada, so that has seen a big jump higher in terms of oil prices at the open today. Looking at the indices space, we have seen the likes of the FTSE really rallying heavily at the beginning of today's session, and this is really starting to look like actually we could have bottomed out and we could be seeing a very strong week for the indices. We're going to start off by looking, as we always do, with the FTSE 100. This is it on a 4-hour time frame, and you can see that we have broken above this crucial 61.58. Now, that was a crucial pivot because that was essentially the high that we saw back on the 5th. And that means that we're now creating a higher high. Now, we'd be looking for retracements to be able to get back into it. I don't necessarily like to just jump into straight line trades here, but ultimately this looks like we could possibly be seeing some sort of recovery because of the fact that we're not creating those lower highs anymore. If you look in terms of the daily, we can see what we were talking about last week. Now, ultimately, we were talking about the fact that actually it came into this 76.4, and I was saying I should be saying that I'm bullish at this point, but I was a little bit worried because we were looking on a weekly time frame. It's looking like we could start to roll over in a more definitive manner. Like you can see, we came back to 76.4, and I was saying, you know, if I'm going to get bullish once more, I would need it to firstly not break through 6,006, which is what happened, and secondly start to see some sort of bullish reversal signals coming in play. You can see that long lower shadow. We saw that close right at the top end of the day's range. Now, today we're seeing that creation of a new higher high coming into play. So I'm starting to believe that actually we could start to see a rally back towards this 64.32 mark. Again, we'll look at it on a shorter time frame, on the hourly time frame. and see that we did see a retracement earlier, but largely it's rallied back up towards this high around about 61.77. If we get an hourly close above there, then that's likely to spark the next big rally higher in terms of the FTSE. But I do think we have got further gains to come in terms of this, and therefore retracements are likely to be bought into. Your next major resistance point is that previous resistance from the third, which is around about 62.10. Getting to 62.10, you'd be quite likely to come into another retracement, at which point you'd be looking around about these areas 61.69, 61.03 kind of areas for new support. But I do think we're likely to see a lot more of a bullish start to the week for the FTSE 100. In terms of the DAX over in Germany, that's it on the hourly time frame. You can see very strong start to today's session. This is it on the daily. Now you can see that we didn't come into the 76.4 here. We almost did, but 96.97 was not reached. Ultimately, this is very far away from the low that would have needed to be broken for a bigger or longer term picture to become bearish. But ultimately, it's looking like, especially with that rally that we saw on Friday, the rally that we're seeing at the beginning of the day today, it's looking like we could have seen all the selling that we're going to see for the time being. You can see the trend within the last, say, 3 months has been towards the upside, so it would make sense that soon enough this is going to come back up into a more bullish state. You can see here on the hourly time frame, it's taken out this 99.28, it's taken out this resistance area around about 99.72. And it's rallying heavily. Now, ultimately, as I always say, I like to play the pullback. So if we started getting a retracement and we started coming into this kind of area and we got the Fibonacci's out and it was either a 61.8 or a 76.4, then that would lead me to, you know, be considering getting long within that move. But ultimately, I wouldn't necessarily go long right now because it's quite risky, because it's so overextended. You could very easily get a decent pullback. So I am bullish. I do think we're likely to see further upside to come, but I'm waiting for retracements for me to get opportunities to get long of this market. Finally, in the Dow, this is it on the daily time frame. We can see that, yes, we managed to see this pullback last week, but we didn't take out the real key level, which you can see here, if we get a horizontal on it, is your first major swing low coming out of that 17,484. If we got a close below there, then all of a sudden you could say this is a head and shoulders formation or whatever you want. You know, we get a close below there. Ultimately, the key is that we're not creating higher lows in terms of this longer term time frame. For the time being, we continue to create higher lows. You can see we've got the stochastics starting to turn into a bit more of a bullish manner. It was about the most oversold that we'd seen it since around January time, so certainly very overextended within that sell-off. On the hourly time frame, you can see again we're creating those new highs. The key resistance point that you're going to be looking at for the short term is going to be 17,805, but it does look like we've seen the pullback and we've got a close up above this 17781, and therefore this gives me confidence that we're likely to see a further upside. I do think we're going to have a very strong day for the Dow alongside the likes of the DAX and the FTSE 100. Looking at the FX space, you know, the big mover recently has been the US dollar, and we saw the dollar drop to a 15-month low in terms of the dollar basket. And really that sort of posed a question, are we seeing a big topping pattern that we're going to see it flush lower and we're going to see even more losses, or are we going to see it reverse higher? And ultimately that question seemingly has been answered. We've seen it rally very heavily ever since breaking lower, and we have seen that continue despite the fact that we saw a very weak US jobs report. That means that we're likely to see more accommodative stance in terms of the US Fed, and that should actually be weak for the US dollar. It's not necessarily been weak for the US dollar, and that says a lot about the underlying strength that we're seeing at the moment. So we are going to start off with the US dollar basket, that's the US dollar index. If I take it out on the weekly time frame, we'll show what we mean about this topping pattern. You can see this clear topping pattern, 92.75 was a key level to be broken. Now, we needed to close below that. That didn't happen. We also had this trend line that could potentially provide support. It didn't break through that either. And then we closed in a very bullish manner right at the top of the range of the week. Now, on the daily time frame, we can see that we've pretty much, since attempting to try and break lower, every single day we've been in the green. Now today there is a potential, you can see as we're moving into this rally, you can see that the candles are largely getting smaller and smaller, so there is a potential that actually this could start to fall lower. But there is a good chance, you know, if we don't break below this 9200 kind of mark, there's a good chance that even if we did see a pullback, it'd be a short-term thing before a rally higher, because ultimately if you look at this wider move that we're looking at here, you can see that there is essentially a sort of wedging pattern that we're seeing here coming into play, and ultimately that is a bullish a bullish pattern that we're seeing in a downtrend especially. So, you know, the key thing here is always going to be the breaking of your first major swing high on the way from a downtrend, and 95.22 is that level. So if we get a move back above 95.22, I can say with quite a lot of confidence that I think we'll get back towards the upper echelons around here. You'll be looking at 98.61, you'll be looking at 99 or 10,000 kind of mark. You know, that's the question that will be asked if we get a break up above there. The question we're asking right now is there more in the tank? And if we look in the hourly time frame, this should give us some sort of idea of whether it is more in the tank. You can see that we've tried to break higher once more this morning. It's not necessarily really come through, and we've started to sell off once more. We're seeing this sort of sideways consolidation coming in play. 93.85 towards the downside, 94.09 towards the upside. So I do think that the way this is looking, we could see a pullback in the coming hours. And you can see, yes, we've got this low set here because of that NFP number. It means we get that big volatility coming in. So we could quite easily come back into this area around about 93.60 kind of mark and then rally once more. That wouldn't negate it. We'd need to see a break below this big spinning top that we saw around about 93.24. We get a break below there, and it starts to look bearish once more. But you know, for the time being, I do think if we did see some sort of retracement, people are largely going to see that as a buying opportunity. This market is so heavily overextended towards the downside, and I don't think there's necessarily much reasoning for that. We are likely to see the Fed raise rates within 2016. The same can't be said for very many major central banks out there. And the likeliness is at some point that's going to have to be factored into the market. So when you see a market that's as oversold as this is, you know, the likeliness is that we're going to see some sort of bounce soon enough. That's what we're seeing at the moment. And we're trying to break out this wedge pattern. We're trying to break towards the upside. If we do so, we could quite easily get back towards the top end of this range. So bearing in mind, we could see some sort of retracement for the short term, but I do think we're going to see further upside to come. The next market we're going to look at is euro dollar. So this is the weekly time frame. Now the key here, of course, is the fact that we had this massive level 117.15, and 117.15 was not broken. It did hold. Price action came actually into the 100-week SMA and sold up from there. You can see the top of the previous rally ended with this very long upper shadow. We've seen a similar kind of thing this time, of course, not exactly the same length, but still relative to that other candles within that whole rally, that is substantially larger than any of the other candles that you've seen. Comparable, I guess, to the other one that was actually marking a top as well. So that is a very bearish candle in itself. You can see the market's overbought in terms of the stochastic. So I do think we've got further downside to come. The daily time frame shows you that we still remain within an uptrend for euro dollar. So we need to break below this 11220 to start to say that actually we're going to see a bigger and a wider move towards the downside. For the time being, we are within a retracement of that move that we can see here, and therefore you're going to be looking at Fibonacci levels for the time being. If we zoom in on this, 76.4 at 11312 is going to be interesting, and so is 11370. If we look in terms of the short-term time frames, we can see that largely, let me get this fib off here, that largely, you know, we tried to break lower. We've been largely sideways or grinding lower. We've not really seen massive amount of conviction. I would expect to see us sell off once more, and therefore as we come towards this upper end of this sort of near enough range that we've been looking at, around 11420 kind of area, you know, I'd be happy to go short once more. I would only become bullish once more with a break up above 11481. Next, looking at the dollar yen. Now we have seen this really start to ramp up today. You can see we've seen significant upside in terms of dollar yen. We saw this big downtrend coming in play, and look how overextended that big move is towards the downside. You're always likely to see some sort of retracement when you see a move like that. Now if we look in terms of the hourly time frame, we can see that we are creating these. Let me try and get it in a bit better. Maybe the 4-hour chart I think will be a little bit clearer. There we go. So you can see this clear stepped move higher. That essentially means to me that I'll be looking for the next move lower for me to go long once more and start to look at some of the retracements to see where I can get long. 107 would be a good area if it did come back into there, but you know, I wouldn't be chasing this for the time being. But it does look like for the short term, you know, for this week we could see a decent move towards the upside for dollar yen, and therefore any pullbacks are likely to be bought into. You'll be looking at, in terms of resistance points, it's quite difficult. You can probably take this little peak here, 108.70 kind of mark. You can look at previous peaks here, 109.96. So some of the resistance is quite hard to come by, and they don't necessarily mean as much as some of the big resistance points you might have found elsewhere. But I do think we're likely to see further upside, and any pullbacks are going to be bought into, in my opinion. Looking at the commodities space, big news over the weekend in terms of the Saudis replacing their oil minister. We've also seen this wildfire over in Canada really pushing crude prices higher, and therefore that's where we're going to start. We're going to start off by looking at Brent crude. This is Brent crude on the 4-hour chart. You can see that we've gapped higher. In terms of the wider time frame, the daily time frame shows you that we are still within a very clearly defined uptrend. We didn't break below this support level here around about 44.05, and subsequently it's looking like we could possibly be rounding off towards the bottom for a move back towards the upside. This is the hourly time frame. You can see that it's been very choppy, but it wasn't choppy on the way down, and now we've started to establish, okay, we saw lower lows, but then we saw a higher high, then we saw another higher high on flatlining bottoms. You know, those are the kind of things. This is starting to point to the fact that we could start to see a resurgence, and we're seeing exactly that now. We're starting to see how it was very orderly on the way down. We're starting to see that come back into play now. So I do think this is going to become a lot more of a stepped move higher and a lot more predictable, at which point you can start to try and look out for some of those retracements to go long. I do think that we're going to see further upside. Your resistance point 46.85, $47, $47.62, and then up above that 48.28. But I do think we're going to see further upside. The key here for the day is a break up above 46.46. We do that, we're likely to see another leg higher, at which point you'll be looking for a pullback and then going long again. So I do think for the time being we are going to see further gains in terms of Brent crude. This is gold, not necessarily been playing out the way that I thought it would be, quite honestly. You can see that we got this clear bottoming pattern coming into play last week, but today it's been selling off very sharply, which is not particularly a good sign for those gold bugs out there. If we look at the Fibonacci retracement, we can see that we've come into this 76.4 pretty much on the nose so far today. So hopefully we're going to see a bounce from that. Hopefully we're going to see it rally once more and regain the 1300 mark. But certainly the key here is 1268. If we get a close below 1268, it does not look good at all. You'll be looking at 1260 kind of mark as both horizontal or trend line support. But certainly I think the 76.4 and the previous low are going to be the two things that really determine exactly what happens for gold, not just today, but for the rest of the week. That's it for today. Other than that, join us on IGTV and IG.com, or follow me on Twitter. My name's Josh Money here at IG. Have a great day.